All right, so Jay, according to your data, 56% of the imports into the U.S., they're inputs for manufacturing. What could these tariffs, you don't know exactly what they're going to be, but what could they mean for your industry?
Yeah, we don't know what the actual proposal is going to be or the actual plan is going to be from the president today, but in any scenario, it's going to add costs to manufacturers, especially for those inputs that are coming into the United States for finished goods and already finished products. So manufacturers are bracing. We've got 14,000 members right now who, frankly, don't know what the future holds in terms of additional costs. And that's why you're seeing this type of concern and sentiment among manufacturers. In fact, 3/4 of manufacturers who we surveyed rate trade uncertainty as their #1 concern right now. That is up 40% over the last 6 months. That's a huge jump.
So, Jay, the whole idea of these tariffs is to get Americans, I guess, to buy things made here in America. When you're talking to your members, whether it's autos or pharmaceuticals, other sectors of manufacturing, are you hearing from them that they believe long-term this will increase their pricing power domestically? Will it increase their demand domestically? What are you hearing from them?
I think it's pretty safe to say that everybody would like more things made here in this country because that's good for the economy, that's good for jobs. What is not good, though, is driving up the cost of actually making those things here in the United States. So the first thing that we need, Frank, and you and I talked about this a few weeks ago, the first thing that we need to see is we need to see Congress, frankly, do its job and get the tax reforms from 2017 renewed so that we have the certainty in the tax code. Also, the administration is working on reducing the regulatory burden. That's a lot of cost. That's about $50,000 per employee per year for a small manufacturer. And then, of course, energy inputs and the cost of energy is important, as well as workforce challenges that we have. 500,000 open jobs, for instance, in manufacturing today. So you add all that up, if we could have those advancements and those things that will bring costs down, that's good for investment here in the United States. Adding costs for inputs like critical minerals, for instance, really does not help us in the long term.
Okay, so that doesn't help you. You've talked about the Tax Cut and Jobs Act several times when you come on the show. So you have another survey when it comes to that. You say about 69% of your respondents say they're going to hold off on purchasing capital equipment unless that gets passed. Another 45% are going to hold off on hiring. Tariffs, how does that also impact these numbers? Does that just increase that 69%? Does that increase that 45%, at least in the short term?
Well, I think it's all in one bucket, Frank. I mean, you have this overall uncertainty. There was a lot of, enthusiasm when the president came in and talked about strengthening manufacturing here in the United States, talked about an agenda that would lower costs. But when you see these, if we don't get the tax reforms renewed, that is an additional cost. If if tariffs are imposed, that's an additional cost. So that's why you're seeing consumer sentiment lower. You're seeing the PMI index that, as you mentioned, is now in contraction. That means that manufacturers are putting these decisions on hold. They're waiting to see whether they should invest and hire. That's not good for the economy.